Good afternoon. This is Sean Golding with Golding and Golding, here to discuss the basics of those pesky IRS criminal tax investigations with a focus on international tax. Now, in general, violations are going to be civil. In fact, most of the time they're non-willful, despite all the garbage you will undoubtedly find on your research quest. You're probably not going to prison. It's probably not even willful, but it does happen, right? Most common is a non-willful violation. Uh, Keeping it in the international framework, you never knew you were supposed to report the foreign account. You're otherwise a super diligent person. You find out that you missed some reporting and you want to fix it. Then there's willful, where there's no actual criminal willfulness, but civil willfulness. You pretty much knew you were supposed to file it, but you weren't sure. Maybe it was reckless disregard. Maybe it was willful blindness, but it's not criminal. And then the next level is criminal. So maybe you're intentionally trying to hide income in addition to hiding accounts, moving assets offshore, forming fake companies, straw men to help move money and assets, keep it offshore, lying to your foreign financial institution about your U.S. status. And on that note, that doesn't include maybe you're in Taiwan or China, Japan, Thailand, and you have a local ID that you use to open the account because that's what they ask for, but maybe they don't ask for your U.S. person status and you didn't know you had to tell them. That's not criminal, right? We're talking like you were intentionally going in there and providing false idea with the understanding that you're hoping that you could generate income over there, which may be tax exempt overseas, not have to pay U.S. tax on it. So let's go through some of the basics. Intentionally hiding offshore income that's earned. So, example, taxpayer is overseas working, or even if they're working in the U.S., but they have foreign customers. And maybe the person's going to collect $100,000 in fees, and you go, you know what? Don't give me a 1099. Just give me cash. Maybe move $50,000 of cash into my account, and let's buy $50,000 worth of crypto on a foreign exchange. And never the twain shall meet. We won't tell anybody, and hopefully the IRS doesn't find me. That would be earned income. There's also passive income. So another taxpayer generates a significant amount of money in their foreign accounts, interest, dividends, capital gain. They know about the worldwide income taxation model. They know they're supposed to report all of their income. They knowingly fill out their tax return with the intent to artificially reduce their income by not including this information on their U.S. tax return. FBAR and FATCA violations, right? In the past few years, there's been more enforcement, both civil and criminal. There was a recent FATCA criminal case a few years back, and FBAR criminal. There have been a few of those salt and peppered over the past few years. But the idea is you're opening these foreign accounts. Maybe you're going into, I don't want to say Switzerland, it's not as common, but you're going in somewhere where you're talking with a bank manager. You guys agree that you may open the foreign account using a nominee or a fake name, fake corporation name. Maybe you fill out a W-8BEN instead of a W-9. You ask for a numbered type account or equivalent so no one's sending you the information. And so the idea is you're opening these foreign accounts to keep it outside of the purview of the IRS, Department of Justice, any other three-letter agency here in the U.S. Depending on the facts and circumstances and just how egregious it is, it could lead to a criminal tax investigation. Other ways that people have been getting caught recently are the following. One, country signs a FATCA agreement. So there's more than 100, I think there's 114 foreign account tax compliance agreements, hundreds of thousands of foreign financial institutions that report. Maybe bank manager A signed you up with the understanding that they're never going to report you. Bank manager A is gone. Bank manager B is there now. And now the bank is trying to be FATCA compliant or CRS compliant. U.S. isn't part of CRS, Common Reporting Standard, but it's all entwined, right? And so now that bank is reporting you to the U.S. government. You don't know that. You're in an audit. You double down, claiming you don't have any foreign accounts. They find out you do. And next thing you know, there's an investigation. You're met by special agents. Maybe the foreign FFI is foreign financial institution. Maybe they enter into a deferred prosecution agreement. And so part of that agreement is the bank has to report any U.S. persons that they believe are customers, or that way the US government now has that information, and if they get to you before maybe you do a voluntary disclosure VDP, that could also lead to criminal tax investigation. And of course, the pesky whistleblowers, people who want to do better by getting you in trouble. It could be someone who's just trying to cash in. It could be someone that just doesn't like you very much, former business partner, scorned spouse, things of that nature. If you're out of compliance, if you're willful, the voluntary disclosure program is the only program that you could do. None of the other ones you'll qualify for. But if you're non-willful, there's various other programs you may qualify for. There are the streamlined procedures, delinquency procedures, and reasonable cause. We have a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate to your matter, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.